Hey, Andrew Woodward from The Investor's Way, and welcome to Woody's Weekly Wisdom, episode number 90. And what a day to be doing a review of financial news in the market. And so, got this one here, get me out of the way. RBA's stunning Trump warning for Aussies. It's a stunning warning for Aussies. That's interesting. So let's go and see what it's all about. We come across and it's all talking about Australia hit with a 10% tariff from US President Donald Trump. So what's the stunning warning from the RBA? Well, we'll get to that in a moment. So if you've been living under a rock and missed all of what happened this morning out of the US, and obviously it was Wednesday evening, afternoon their time, they delayed the announcement until after the US stock market closed. I wonder why they may have done that. And then they made their announcements about all of the tariffs that they're introducing. I'm not going to go through them all, but ultimately, if there was no real existing tariffs being applied by a particular country, you got 10%, and that's where Australia fit in the equation. But if the US believed that you were charging some form of tariff, because it wasn't just tariffs, it was supposedly currency manipulation and any other thing that they could bring into the mix to come up with a number. And as a result, some countries like China are getting hit with 34% tariffs on all goods. So if you live in the US and you buy on Amazon, everything on Amazon is about to go up, or not quite everything, but the majority of products on Amazon in the US are about to go up by a minimum of 34%. And so the biggest thing that happened, as soon as wasn't Albanese commenting about how those tariffs were unwarranted, the biggest thing that happened was the futures market on the US stock market. It immediately plunged. And I'm using the word plunged. We're going to see here words like bloodbath, crash, trillions of dollars being wiped out, all those emotive words. But there's no hiding from the fact that the US financial and stock markets reacted very poorly to the announcement, and it saw massive drops in both or all three of their main indices. In fact, all of their indices. But the Dow Jones was down about 3%, the S&P 500 5%, almost 5%, and the Nasdaq even more. And that was on initial announcement, and then they bounced around a little bit. What we've seen over here in the Aussie market is we got hit early, and then we've spent most of the day clawing back. And I just want to show you what that looks like. So if we click over here, this is an ETF for the Aussie market. And you can see we've opened after closing yesterday at 32.23 up here, the dotted line, opened all the way down here at 31.80. And then it spent most of the day just inching its way higher to close around 31.95. So down 0.87%. So the interesting thing will be what happens in the US market when it reopens today, their time, or Thursday, their time, Friday morning, our time, when the markets reopen, because they would have closed yesterday and did close yesterday actually a reasonable amount higher. It was looking, when you first turned on the media this morning, you would have seen the US markets having a pretty good day until afterwards, when they closed and the futures market clicks in, and we've just seen pretty much a very heavy fall in the market. And so this article, I'm still trying to get you the surprise, but just is talking about how some of the Aussie beef producers, because they're getting hit with the 10% tariff. The wine industry is talking about how bad that's going to be for their products, given the level of that tariff introduction and on the way it's wine is distributed, there's a lot of people in between you and the bottle of wine, and therefore there's going to be multiple layers of that 10%, which ultimately means the product's going to go up a lot more than just 10%. So there's just lots of industries that are being hit pretty hard and responding. Some people are arguing that on the face of it, or on balance, the tariffs were not as bad as what was expected. Others are just saying how horrific the ones are that are significant. Now, obviously, Canada has been a big target. They were left off this list today because they've already got their dose, and they're already in a trade war with the US. China was obviously in there at 34%. Taiwan was in there at some ridiculous number as well. And so there's going to be a kickback. There's going to be a response from all around the globe, despite the US Treasury, I don't know what he's called, but let's call him the department head, Scott Bessent, saying to people, oh, please don't retaliate. You don't want to retaliate because that just starts a trade war, and you won't win a trade war with the US. Well, I'm afraid from what I'm seeing and hearing, there's going to be some retaliation, and the US is not going to the rest of the world is not just going to let the US plunge their economies at their whim. So here we are. Here is the surprise. How was it described again? The stunning warning for Aussies. What is the stunning warning? Well, I'm sorry, I'm lost to find what this stunning warning is, other than that the May rate cut has firmed off the back of the Trump tariffs. I don't know if that's a stunning warning. We'll keep going in this article to see if we can find a stunning warning. But in this case, what we're hearing is that this the tariff policy coming out of the US has made a rate cut in our market firm in likelihood of happening at the May 19 and 20th meeting. So it's now up to a 70% probability of a rate cut. And so if you're buying local and you get a rate cut, you're going to be very happy. If you rely on some products that come out of the US, you're not going to be, if you're relying on trade that is done between the US and other countries, and that flows on to products in this country, then you're going to be pretty disappointed because of those tariffs. And at this point, the Albanese government has said they will not retaliate because there are better ways to deal with it. And that's probably wise at this point, particularly given that you're in an election campaign. The last thing you want to do is pick a fight with the US that you don't need to for now. The announcement is that we're getting 10%. We might have to do some negotiation, and hopefully wiser heads will step in, and we will get some form of relief, and the economies can go back to being normal. And so that's the interest rate side of things, firming for a rate cut. And then we've got, as you can imagine, and this is what I say to people inside my program all the time, when we go into what's described as risk on, and that's when the stock markets are falling heavily like they have, that's when gold becomes very attractive. And as a result, we've seen that price reach all-time highs and surge to $3,158 today. Again, if I have a quick look at what it's closed at to just get a more up-to-date idea, it's not showing there, so we won't go down that path. But the gold price is up around all-time highs. We're in a risk-on environment, and there's an analyst here suggesting it could go as high as 3,300 from the current 3,158. And just a week or so ago, it was below 3,000. So gold is certainly on the surge. And then, we're starting to talk about the tariff carve-out. So I think everybody has expected, and we've already seen it in earlier tariff announcements, that the US government has found ways to carve out or make exceptions or reduce the initial announcement to soften the blow, or get a position that they actually wanted rather than the one that they've come out with. And so there's a lot of discussion now about who or what or where or when certain industries or rates might be adjusted in terms of what tariffs are being imposed. So we could keep our eye on that, because that is definitely going to have a massive impact on global stock markets. If we start to see some carve-outs, that will stop the bleeding or certainly reduce the bleeding. Again, talk about the 10% on Australia, 34% on China, 46% on Vietnam, just the poor country of Vietnam, and they're getting whacked around the head by the US with a 46% tariff. It's just ridiculous. We continue on looking. I'm looking for this. Yes, what was it again? I keep forgetting the stunning warning. We've got to find this stunning warning. CBA economist Harry Otley thinks we got off lightly. I don't know if that's necessarily true. No ban on Aussie meats. That was something that was feared, because Aussie beef was singled out by Trump in his speech about how he was going to hit us with 10% on beef because we don't take their beef. The good news is that they're not banning our beef. They're just hitting it with a 10% tariff. And that we've got here, the type of or the amount of what we're selling around the world in beef. And there are some of the table, or one of the tables, showing all the different tariffs he was imposing. Quite comical, to be honest. And then we get down to the PM is offering $50 million in support to find new customers in relation to overseas markets. So what he's basically saying is, if you've been relying on the US market, let's go and find where we can export our products where they won't bully us with tariffs. And so he's offering $50 million. I imagine that's an extension of an existing program where people can access some of that money to go and look to develop new export markets where our products will be valued and won't be hit with tariffs. More here on what happened to the US markets. We've spoken about it. At the moment, it's all about the futures market. So we'll wait and see what happens overnight with the actual market. But the futures market has certainly slowly creeped higher throughout the day. Maybe that's wishful thinking, but certainly, the US markets will open dramatically lower than what they closed yesterday, because, as I said at the beginning, these announcements, they came out after the market, the live market was closed. So that will be interesting to see what happens there. Here's the hit list. Recession day. So some people are calling it recession day because obviously the president was calling it Liberation Day, one of the 3 days now that is labelled Liberation Day. So it's interesting, which one they'll celebrate. And then it just continues on about tariffs, and all the rest. But I have failed to find out what that worrying warning is. But the long and the short of it, if you are an investor or you're watching this and you're concerned about what to do when it comes to your money, again, as I often repeat on these weekly wisdom videos, not a lot changes as a result of what's happened today. When it comes to managing our money, we're going to continue to have a plan for it. And when it comes to investing, when we see days like these, and this is something that I teach in the program, when we see a day like today, we don't panic. We don't get caught up in all the hyperbole. So like I was saying before, the bloodbath and all this type of stuff, we don't get caught up in all of that terminology. We just sit back and wait and see what the market does over coming days. And when it settles down, effectively, what we've got is a market that has been discounted. And over time, that discount will be eroded as markets recover and continue to do their thing. So we don't know when that would be, but we certainly do know that there is going to be a period of time where these markets are on special, discounted, and we can take advantage of that to grow our wealth. So that is a bit of a wrap on what has transpired today. And I really do encourage you to be mindful of the emotive language that's going to be used in the media over coming days to describe all of this stuff. It's designed to create fear, and we want to just see it for what it is. bit of short-term pain, but ultimately the potential or the opportunity to make long-term gains. And so if you look at it from that perspective, it's not all that bad. Sure, it's hurting your existing and my existing investments, but long term, we're going to probably sit back and say, we took advantage of that moment in time, and it did a great deal of good for our long-term wealth. So hopefully that's helpful. That's Woody's Weekly Wisdom, episode number 90. And as per normal, I really want to get this information out to more and more people. So if you're watching on YouTube, hit the like button and the subscribe button, so the little bell to get notified, and the subscribe button. If you're watching on Facebook or LinkedIn, do us a huge favor, give us a thumbs up, hit that like button, leave a thumbs up or something in the comments, ask a question if you want to, and if you're really brave, share it with your network so more people get to hear what's going on in the world of finance and financial literacy. Have a great week. See you again next week. Cheers.